IVM.
Hi, I'm Rohan Joshi, and on my podcast, the show about crypto, I've been having some pretty cool conversations with industry experts about what exactly cryptocurrency is and what makes it so exciting. If you haven't already, please check it out on the IVM Podcasts Network. Now, a quick shout out to my fellow crypto heads. We've got a listener survey going on, which will take not more than 10 minutes of your time to fill out. So please check the link in the description and help me out by filling it up. Don't forget to tune into a show about crypto on the IVM app and wherever you get your podcasts from.
Folks, welcome to Paisa Vaisa. I'm your host Anupam Gupta, B50 on Twitter, and today's episode is unique because for the first time we are talking about a credit product, but that's trade finance, right? We've spoken about loans, we've spoken about BNPL, we've spoken about a lot of stuff on the credit side, but we've never spoken about trade finance. Don't worry, we'll try to make this as accessible and as understandable as possible for you guys. Why is this important? A lot of you guys who are listening into the show could be entrepreneurs in the small, micro, medium space or MSMEs as we know them. Some of you guys could be actually looking out for trade finance. And I think this episode will be really useful for you. And if not, then it's always good to know about an area which was normally considered institutional or probably for the HNIs, and now that's becoming accessible to the retail public. In startup world, it's called democratization, but let's leave that aside. So my guest today is Ram Iyer, founder and CEO of the Vayana Network. That's Vayana, and we'll be talking to him right after this short break.
Sometimes it feels like all the weight of the world is fallen onto my shoulders, and it usually happens on my downtime while I'm enjoying a nice game of cricket. It's like my family realizes that I'm watching cricket and they just rush to ruin it for me then. My mom will come in ranting about some problem with the neighbors. My wife will come in shouting about how we need to redo our kitchen, plus also some problem with the neighbors. And my daughter will come in angry at me because the color of the new car we bought is not what she had wanted, which is apparently the biggest crime a father can commit. Plus, of course, some problem with the neighbors. If only things could be just the same, even if something were to happen to me. Unless www.hdfclife.com, select, done. Things aren't so bad after all. Live calm. With HDFC Life, click to protect life. The Life Protect option protects your family from financial uncertainty. Visit hdfclife.com to know more and for terms and conditions.
And welcome back, folks. Ram, welcome to Paisa Vaisa. Thank you so much. Thank you so much for doing this for our listeners.
Hey Anupam, thanks a lot for having me on the show. I've been quite a fan of a couple of I've watched a couple of episodes to it. Great to be on the show.
Very kind of you. Thank you so much. How do I pronounce the organization, the firm that you represent?
Vayana. It's Vayana, and it actually comes from a Sanskrit word which represents means weaving. So the whole idea really is that how do we kind of weave the small businesses in this country into the financial world. So that's how the reason why we picked up that word. And of course, I wanted an Indian word when I started this company. I didn't want to kind of name it anything else.
Sure. So tell us what it does, because our listeners might not have heard about it. So we can just have a small 2-minute intro into what Vayana does. Of course, we'll get into details as we go into this episode.
Yeah, so we help small businesses who are engaged in buying or selling from other businesses for their own companies, factories, for their services, whatever that they're doing. Whenever you buy and sell, you need credit. That's a simple fact, right? I mean, even as retail consumers, we today get credit if you go to a pharmacy shop or to a retail shop. Similarly, I think all businesses require credit. Credit is, not easy to obtain if you're a small business, and it is definitely not easy to obtain affordable credit. So all that Vayana does is to make sure that people can get credit for the things that they buy and sell. And the word we use is supply chain. And very quickly, supply chain, all it means is that, you want to make a car. There are 30,000 people who are involved in making a car from other companies, right? I mean, a Maruti requires 30,000 people to help them to make a car. All of these guys are in that supply chain. Now, each of the 30,000 have further businesses that supply to them. So, if you just put it all together, it's a chain of suppliers, and they need financing for anything that they buy and sell to make the goods. Right. So I think that's all that is.
Okay. Trade finance. Okay. bit of a technical word. Let's probably just take one small step back for our listeners, right? Now, if someone out there is an SME or an MSME owner, he'll know what we're talking about, which is basically payables and receivables. Now, as a chartered accountant, I know that those are both different sides of the balance sheet. But for regular listeners, just break this down. What exactly are payables and what exactly are receivables?
So payables is, as the word says, if you buy something, you have to pay the people, somebody who is supplying to you, right? So you're running a small office and somebody's giving you mineral water, a dispenser, right? On your dispenser, you're buying mineral water dabba from them every day. You need to pay them. So that moment he brings you one mineral dabba and put it in your office, he'll give you an invoice and you have to pay him at some point in time, right? So that becomes your payable. Similarly, you have a customer and you supply him something, you are going to invoice him and then he has got to pay you. So there is no difference between you and me individually when we go out to buy and sell what we have. Similarly, businesses, basically every business only does does three things. It buys, it makes, and it sells, right? And so whenever you buy and sell, that means you're talking to other parties. And therefore, every time there is such a transaction, which is called trade, when you buy or sell, you basically take on an obligation, right? Either you take an obligation to provide a good and get money, or you buy a good and you have to pay. And therefore, when you buy a good and pay, it becomes payable. When you sell and you want to get money, it becomes a receivable. So it's just two terms for that.
Okay, now that we've got the basics out of the way, let's talk about the use case here, right? And let's put ourselves in the owner or the MSME's perspective. Let's say that someone is listening into the show. Let's try and explain, why do MSMEs need trade or channel finance, right? When they already have options like maybe business loans, loan against properties, loan against securities, stuff like that. So you just explain this to us. What's the use case here?
Yeah, so if I'm a small business and I go to my bank and tell them, look, I need loan. So the first thing he's going to ask for is security. He's going to say that, paisa, jaidat, kya hai aapke paas, building, land, something you have to give as security for the loan to take. And that's how you get a loan from a bank today. If you want to take a business loan, which is what you get today in SMSs, right? You are qualified for a business loan types. Those are all very, very expensive loans, 25-30% really loans that you get. So in effect, for business, if it wants to get money for the trade credit it requires, for whenever it buys or sells, it needs trade credit. One of the nice tools is what's called supply chain finance, channel finance, trade finance, whichever what you want to call it. And that actually finances the trade. It is not financing you as much as it's financing the trade between a buyer and a seller. And that makes it very interesting. Therefore, if I'm a small business, let's say manufacturing nuts and bolts, and I'm supplying to Bajaj Auto, just as an example, for me to go and I'll need money because Bajaj Auto is not going to pay me immediately. It's going to pay me in 30 days or 60 days whenever I sell to them. I need to buy raw materials. I need to make stuff and all that. So I need, credit. I need some cash. Where do I go and get the cash? Now, if I've got a loan from a bank, I can use that. But that loan from the bank is very limited because it depends on how much property I have or plant or machinery I can authenticate, right? So then the question comes is that, can I use this trade that I've done with Bajaj? Bajaj ne bola, you send me lakh rupees worth of nuts and bolts. Can I use that to get credit? And that's really what the way supply chain financing works. It basically says that, okay, if there is an evidence of a trade, if Anupam has actually sold to Ram, and Anupam and Ram both agree that such a transaction has happened, then we are ready to step in and pay Ram till he gets the money from Anupam, so that he at least has the cash to run his business. So I think that's all that, in effect, the reason why supply chain finance is so important, or trade finance is so important, because it lubricates this whole process of buying and selling. जो हम लोग खाता books बोलते हैं retail में, I think you all be running a consumer show, so there's a lot of consumer credit that happens. The same principles actually hold for the business side also, in the sense that whatever you are wanting to consume or whatever you're wanting to kind of get for yourself, you have to finance it, and I think that's what businesses require credit for. Supply chain finance ends up being most cases unsecured credit. And it's a cheaper credit because, usually if you have Bajaj Auto on the other side, people are ready to take the risk on you. They don't care. You are a small guy. So, so I think the whole idea really supply chain finance works so well is that it actually takes into account whom are you buying and selling from. And if you have comfort in that party, you can say, okay, I don't care whether you are small. You don't have a balance sheet. You will not be able to get credit normally. But because you're buying and selling from somebody else, we will now give you money. So, if you take a mortgage loan today, if you have a guarantor, then the bank is ready to kind of reduce the interest rate and give you, right? If you can say, some large guy is my guarantor and they have a lot of comfort, obviously your loan, mortgage loan ka rate kam ho jata hai, house finance ka. Similarly in this, if I'm doing with somebody else a little bit bigger, then I can use that comfort to reduce my cost of interest. And that is all really supply chain finances.
Okay, fine. So what is the current problem statement in your view, right? Where are the gaps? Where do you think that an MSME or an SME, whoever it is not able to get this? So on your website, for example, when I had a look at the Vayana website, I like the 3 words that you used out there. You said affordable, easy, and fast. Okay, so maybe if that helps you frame things that way, you just explain to our listeners.
Yeah, sure. So I think, one of the common myths really in the market, everybody says there is no access to finance or to credit for a small business, which is not really true. You always have access to credit. The question is what cost, right? So, if you take a kirana wala today in India, his net margins are typically 2 to 3%. If I give him credit at 2% a month, effectively I'm saying, jo bhi aapne kamaya, wo pura main credit cost mein le raha hu. Right? I don't basically get any net margin at all at the end of the day. So the question really is that, can you give him affordable credit? So that's the first problem that you want to solve for him. And because you're a kirana wala, nobody is interested in giving you credit so cheap. I mean, if you are a large corporate, people will come and give you credit at 20 paisa per month. But the moment you are a kirana wala, they will say, oh, we don't know you. You may run away tomorrow with our money. So we'll give you at 2 rupees or 3 rupees for every, 100 rupees that you take. Now, that is really the issue that you try to solve. That's the first problem. The second problem is that you don't have collateral, right, as a small business. So how much credit can you get? You will only get credit as the amount of stuff that you have. If I've set up a 1 crore factory with plant and machinery and I say, look, I'll give that as collateral, maximum loan I'll get is 50 lakhs. Today, if you as a consumer go and try to take loan against shares from your bank or loan against property, you will get 50% or 75% margin only of that cost, right? Similarly, for a small business, he cannot grow. So the second big problem in India we have, and which is, I think, a very important problem to think about, is that if you are born as a micro business, small business, you remain a small business all your life. If you're born as a small business, you remain a small business. It's very difficult to move and grow from a micro to small, which is our fundamental problem. And the only reason why that doesn't happen as fast as we would all like is because people don't get access to affordable credit. That's the first very important thing to solve. The second is, how much work do I have to do to get that credit? Now, the biggest resource issue for a small business, and I think all the small business guys who will listen to this podcast will agree, is time. It is actually not anything else. It's actually time, because, you and I have lots of people around us who will help us to, the show, for example, probably has 7-8 people who have coordinated to do this show. In a small business, that same fellow is buying, selling, he's stocking up the goods, he's arranging the goods in his shop. If you go and stand outside a kirana wala, which is my favorite example, you will find one poor fellow is doing everything, right? And the morning 7 say, raat 9 baje tak, he's the guy who is kind of doing everything. The question is that he doesn't have time. Now you tell him, lamba 3-4 form bharna hai, you have to do 100 things to get access to this credit. He can't do it. So I think that's the second problem that you're trying to solve. How do you make it so simple that he doesn't really have to spend time on this? That he gets credit affordable and fast and easy, right? Actually, and last is the fast part. Now, fast doesn't mean that, you see these groceries now coming in 10 minutes and 5 minutes. A lot of people think credit should be instant. And now we have this BNPL kind of mechanisms which say, the time you try to purchase, you will get credit. Now, in companies and businesses, that is not what is required. What is required really is consistent, sustainable credit. I am going to keep on buying. If I run a kirana shop today, I'm going to keep on buying from HUL, Marico goods. I continuously need throughout the year credit. So don't give me instant credit, give me sustainable, consistent credit. So I think that's the third problem we are trying to solve. And that's really what we are working on. One of the big things we want to do is that we want to get the kirana wala same interest rates as a typically large business would get. And I think that's the real important thing for these kirana walas to then say, okay, I'm earning more money. Now, instead of one shop, I will open 2 shops, or this 100 square feet ka shop, main isko 200 square feet karta hu. That's the only way we all can grow as a country. Otherwise, we'll remain this lot of mom and pop shops, chota business, which don't scale. So I think that's the key thing. Yeah.
And I think one part that people don't get is that the guy who's doing that kirana shop is not doing it because he wants to make money in life. He's doing it because he has no option.
Correct.
And these are also huge employers of labor. A lot of, like you said, you're just talking about the one guy who's doing everything, but even he has to survive. So he'll probably hire 1 or 2 more people anyway. So It's a huge topic because there's a lot of capital that's, you want to call it ungainfully employed with these guys. You spoke about a margin of 2 to 3%. Now imagine that someone who's putting his life savings into a shop, he's not even making cost of capital out there.
Correct.
So that's what I wanted to ask you. Do you, how do you manage this? I mean, are you an NBFC? Because this is an underserved segment of the population, right?
Right.
No bank, no NBFC would touch this because probably have a very high NPA rate. So before we go into the break, Ram, can you just tell us maybe something about your business model? Do you just, route finance from, are you just a platform, or just help our listeners understand that?
So, I mean, look, I'm going to actually give you a very simple analogy because this. I think a lot of customers will understand this. Is that today when you go and use a credit card to pay for a transaction, do you really even think about it? You just treat it as a payment transaction, right? And it is so standardized. You have that 4-inch ka plastic. Oh, merchant ke paas ek POS machine hota hai. You put it in, and then you put in your PIN, and the transaction is over. Correct? And it's a very standardized process. And that because it is a standardized process and you regularly keep using the credit card and the merchant has lots of people coming and using the credit card, it's very easy to create credit models, and therefore kind of decide the risk, right? Can you do the same for business to business transactions? That's a fundamental question to answer if you want to reduce cost of credit. You have to basically say that, can I make this whole process so simple and therefore get a lot more information? And therefore, this kirana wala, who otherwise I would have not known, or I would have had to send somebody there physically to check whether he's really there. Now, actually, I can figure out his entire business very easily. Then I can decide my risk is not so much. I don't know if your personal example, none of the kirana walas for the last 10 years that I have seen have gone out of business. They are all there only. I mean, they usually have not only their dukan, and they also stay in the same premises, right? It's a very classic case, right? So you really have a very, very stable business, and therefore you would want to give it credit, which is of very low cost. The moment I can make it all, this transactions to be all digital, I can make the process so simple. I can give these guys, lenders, a lot of transparency into the data. Then I can push them to give credit at a low cost. Ultimately, for a lender, what is the issue? I mean, why does he charge 2% to a kirana wala? Because first he says, I don't know the guy. 2 is that iska credit bahut chota hai yaar. Isko 50,000 1 lakh rupiya chahiye. It doesn't work for me because I have to do a lot of work to give him that credit. Third is that I don't know when he will use it. Fourth is he will say that look, the whole cost of just getting him, servicing him is just too costly because that fellow will keep on asking me for help. What Vayana really does is remove all those issues for a bank or an NBFC. It just says I will make it so simple that your actual cost of financing a kirana wala is very, very low. And therefore, you can reduce the cost of interest that you are passing on to him. So ultimately, what we are saying is, आपका जो भी cost है, normal like loan servicing to a kirana wala है, मैं उसको सब कम कर देता हूँ. तो फिर आप, you can, instead of saying 18%, 24% a year, can you give it at 12% or 13% or 14%, right? And that is the only thing that we are trying to do. And the reason why we are not an NBFC or a bank is that ultimately, unless you are a bank, you cannot have low cost of funds. Today, if I set up an NBFC, I have to borrow from the market at 12%. I have to lend at 24% today. I have to have that margin. Whereas if I'm a bank, I'm probably borrowing at 4% today in the market. So therefore, I can lend at 12% also, I make 8%. Correct? So the idea really is for us has been that can we get banks, big banks, to get interested in the small credit and make sure that all the general risk that they see in that business, we remove. So that they can actually say, look, there's no difference financing an HUL to financing a kirana wala, right? I mean, ultimately the size of the business is very different, but we have the same information, the same mechanism, the same cost of servicing. So therefore, we have no problems in servicing it. So I think that's what we are doing.
Got it. So folks, we're just going to a small break now, but stay tuned because on the other side, we're going to take a live example. How does this actually work for the kirana wala that Ram spoke about? We're going to get into all of that. It's going to be really interesting. And I've always had a lot of questions from a lot of people who've spoken about how they go to the neighborhood shop, like Ram said. There's someone that they've seen for 20 years, right? And these people are doing well, like Ram said, probably because they're staying nearby and they've got their own staff who also come from close by. So, chal jata hai kaam. Matlab, you kind of make things work. But how do you scale them? How if you know someone, maybe this can be useful to him. Can probably go and talk to that shop owner and tell him that, hey, this might be some way for you to reduce your cost. Okay. And we're going to get into all of that on the other side of this break. So don't go anywhere. We'll be right back.
Namaste, this is Cyrus Brocha. I am part of the government cancel culture program to remove rubbish off all the different streams available. So what we have is all the collected rubbish we put together on our show. It's called Cyrus Says. It's on IVM podcast. You have to watch it and listen to it. It's on our app. It's on our website. It's on the YouTube channel. It's on Facebook. There are many different ways. Don't bother me and ask me how. You have to find out. We talk to different personalities. Many of them are known. Some are just people we meet downstairs and invite them up for chai. But the point is, it's fun and it's very therapeutic. So please join in and listen to Cyrus Says.
And welcome back. Okay, Ram. Like I said at the end of the first half, let's get into a typical trade finance transaction. Just to understand how it functions. I know. Just take the case study of a kirana guy. Since you're talking about the kirana guy, and he buys from everyone. He buys from a Levers. Unilever buys from a Colgate, buys from a Marico, and he stocks all of them, or same guy could probably be an MSE who's into ball bearings, probably needs a lot of stuff from a lot of people.
Right.
Let's say that he's got receivables of 1 crore or, whatever number that you're comfortable with. Walk our listeners through the process of being able to use your services. How does this work?
So first and foremost, let's look at a kirana wala. I'll take kirana wala because that's one we see every day, right? So, for your listeners, everything will be kind of very easy to understand. As you very rightly said, a kirana wala is buying from a bunch of companies. So who are these companies? He doesn't see a HUL ka chairman coming and selling to him, right? He sees a distributor or an agent who is coming in every day in a motorcycle, takes orders and delivers goods to him. This is the guys who are very comfortable with the relationship they have with the kirana wala. So they are the ones who know the kirana wala day in and day out. They're talking to him. He sees them as family, right? This distributor in turn is working directly with an HUL or a Marico to source goods from them and sell it to the kirana wala. That's the supply chain. And Hindustan Lever selling to a distributor, the distributor then selling to a retailer. Now, Hindustan Lever may have, say, 10,000 distributors or 3,000 distributors or whatever be the number. Each distributor is probably servicing 1,000, 2,000, 3,000 kirana walas. So if you look at the chain, that's a way to kind of think about this whole problem, right? Instead of going to every kirana wala, you go to HUL. From HUL, you go to every distributor, and from every distributor who refers to you, say he says, "Ye 1,000 kirane wale, I give them regularly goods, and they want credit." Right? And he knows exactly what they're buying from him. He knows what they are, purchasing from him. When are they paying him typically? So he gives you a lot of that data upfront. So the idea really is then to make the process so simple for the kirana wala that he doesn't have to really go in and say, "I want money." He is already being referred to us by the distributor guy who's meeting him every day. And the distributor is saying, "Look, if he gets credit, he will buy more from me. He will free up my balance sheet. So therefore, there's a lot of interest for me to kind of do this business. Credit with you." And the retailer says, kirana wala says, "Yaar, mere ko paisa to mere ko 15 din ya 30 din ke baad dena hai, and I don't want to have any cost to it." So effectively, that's how you create this whole system where you say that people who know the kirana wala, who have been trading with the kirana wala, who have been collecting money from the kirana wala, they are the ones who bring you into the equation and say that, "Vayana, can you set up a program that, there are, in Pune, for example, let's say there are 2,000 distributors of all FMCG guys. We service about 1 lakh kirana walas. We want to get those 1 lakh kirana walas credit." That's how you kind of create this whole infrastructure where suddenly you get scale now, right? And then you can go to a lender and say, "Look, I'm giving you 1 lakh kirana walas. Together they are buying 400, 500 crores of item every month." Then everybody is very interested. Okay, now from a kirana wala's perspective, let's see what does he want to do. What does a kirana wala today do today? He is sitting in a store, a distributor comes to him and says, "Aapko HUL ka kya kya chahiye saman?" He's taking an order and then he's saying, "Okay, I'll deliver it to you." He's giving him an invoice or some parchi that says that you owe me 5,000 rupees or 20,000 rupees for this order. And today all distributors are having one smartphone and they are taking the order. Nobody's writing it on notebook, right? I mean, today everybody's doing that. We utilize that same set of devices that they have. We don't ask them to do anything new. Vayana does not believe that we have to create one new app, one new URL, new thing for the kirana wala to know. They're saying, "Aap jaise dhanda kar rahe hain, waise hi kijiye." On that, we will pick up the information and we will, make sure the credit is available. So really from a kirana wala's viewpoint, we don't want him to think about smartphone chahiye mere ko. It's very interesting. A lot of people don't have smartphones. We think everybody has smartphones. They don't have smartphones. Second is that the owner might not be there in the shop at that time. Is Chotu or somebody else's spouse might be in there, and they may not have that smartphone in which you have put that app. Third is that all of these guys have prepaid numbers. They don't have one universal number that you can keep on assuming every month is the same number. They keep changing their numbers. So you don't want to get into any of those hassles. So you want to tell that kirana wala agent aayega, aap order de dijiye usko, and then he will show you the app, his phone, and you accept the order, and then we'll make the payment happen. That's all that the process we require you to do. We don't want you to change anything. We don't want to teach you a new stuff of how to get credit. And that's why I said this has to be easy. Because the biggest issue for the kirana wala is time. When that distributor guy says, already 3 customers are coming and talking to him. Somebody else is coming and asking for credit. He's dealing with 5 things at the same time that the distributor agent ko order de raha hai. And it's, I spend 2 hours every Saturday, Sunday with kirana wala just observing what they do.
Wow.
And you will be impressed by if all of us MBAs like to talk about time management, you should go and learn from him or her. Time management. They are awesome. They are true multitaskers. So, multitasking environment, we are saying, don't worry about getting and doing stuff for getting credit. We already know this fellow you're ordering from him and he's supplying to you and he has known you for 10 years or 5 years or 3 years. And therefore, we will just use all that information and give credit. You don't have to worry about this. So that's how the process is. The process simply rides on the fact that there's already a relationship. Mia Bibi hai yahan pe. The relationship is there. They've been married for a long time. They regularly, are dealing with each other. Therefore, we will use that as comfort. So I think that's how it really works.
Okay. How does this work for the bank or the NBFC? Or that's not your job? That's
it
work more.
No, we in many ways we are the rails on which all the 3 parties. It's a 3-party mechanism. Very simple, right? You have a distributor, you have a kirana wala, and then you have a bank that has to finance this. So ultimately, we have to take the transaction to the bank, and we have to show them there is actual trade that has happened, which means an invoice is gone, and the kirana wala has accepted his obligation to pay. And then once he has done that, then credit will come from the bank. Right. So you have to do that entire mechanism. You have to complete the loop. And the loop doesn't stop there. Afterwards, finally, after 15 or 30 days, the kirana wala has to pay the money. So we have to make sure that payment also happens. Right. Because otherwise, it's not like a one endless thing where only he gets credit and he doesn't have to repay. Right. You have to make sure the whole cycle happens. So from connecting the kirana wala distributor to the bank, getting the transactions to the bank's lending systems, to making sure this credit automatically flows in. And then it is tracked right up to, when the repayment happens, is really what Vayana does.
Okay. So if I've understood your model right, then you would be making some money from, selling the platform or selling the stack or selling the APIs to the distributor and to the banks, or is there something else?
No, we basically, our role is very simple, right? We have put a pipeline. We have not stopped with the pipeline. We have ensured water flows through the pipeline. And we are charging on basis of the water that is consumed. Correct? And who is the person who is consuming the water? It is the bank. Because who is giving the loan? The bank. Who is earning interest is the bank. So we really, all our monies come from the banks. We don't take anything from the kirana wala. We don't take anything from the distributor. We take it from the banks because the banks are the ones who are making money by providing credit. We are bringing water to the banks, right? We are bringing these customers' transactions. Otherwise, they would not have been finding it easy to kind of access. We are bringing it to the banks. So therefore, the banks are the ones who pay us.
Excellent. So now let's look at this from the kirana wala's perspective, right? Because a lot of these small business owners, the owners, that is, not the people who work there, obviously, because, they're 2 different people. Let's say the owners at many times use, their personal credit cards or take very expensive loans. Like you just said at the start of the show, maybe they've got their own, portfolio of stocks or property or somewhere, and they take loans based on that.
Right.
What solutions would you suggest to these business owners, who might even be listening on to this episode?
So I think one very important thing to understand is always what is the cost of credit. And one of the themes that we are very, very concerned about is that we don't believe enough credit education has been happened to all small businesses. So a lot of ways loans and credits are sold very badly, and you don't know the cost of that credit. So you have to be very careful about what credit you're taking. You gave a good example of credit card. So credit card, if you pay on time, then it is a zero cost. Ever try paying it after that day? Just look at how many fees get added on to it on a daily basis. So if you are a business that is so confident that you can pay on time, then you have no problems. Moment in any business, there is always going to be what you call 19-20, right? If 15 दिन में आपको पैसा देना है, you might give it on 16th day, 17th day. Credit card might be very easy, but you're going to spend a lot of money if you delay your payment. Similarly, you say that, look, I have to take a bank loan and I'll give it. Please understand that the cost of bank loan is not the interest rate alone that they charge. They ask you to lock a property. They ask you to lock some collateral. They ask you to provide documentation. There's a lot of cost other than the interest cost that you pay. So one has to always kind of understand what am I getting into, and always make sure that it is working with respect to the net margin of my business. What I said in the show, kirana wala, if he's making 2 rupees and 100 rupees of sales, he does. and his cost of credit is going to come to 2.5 rupees, you effectively have removed all his income away. Now, does he know that he's going to pay 2.5 rupees? He doesn't, because it's the same thing. Like all of us get conned into teaser loans or not knowing, like BNPL abhi jo chal raha hai. You have to know the cost of actually taking it on. There is nothing free in this world. So therefore, if it sounds very lucrative, please look at the actual fees. And I would say that is very, very important. Therefore, for a lot of the kirana walas, one of the things that we have noticed is that you have to tell them, look, you sign an agreement. They'll just sign. First of all, that agreement is in English. It is 24 pages long. And he just signs. It is like, when the credit card ke saath aapko ek agreement aata hai. I don't know whether anybody, when it comes in that nice envelope, we just take the credit card and we throw everything into the garbage bin, right?
These days it's online, right? You already put your signature out there.
Right. You just agree. You have no idea what you have agreed to. And in a business, you have to be very careful what you have agreed to. So I think the key thing really for us has been that, look, don't just look at 1% or 2%. Look at the total cost and make sure that your business is in a place where it can give it. Because last thing you want is to get yourself into a trap. The second thing you have to be very careful about with all of these businesses, because they earn so little from their existing business, they are always trying to find new ways of making money, right? So you will find a lot of kirana walas are into land property dealings, because unke paas isme to paisa nahi ban raha hai, so they try to figure out there are other ways of kind of making money, right? So you have to be very careful where the money is being used, because land and everything else, if they lose money, they lose big time. So I think the key thing really for every kirana wala or small business, a ball bearing business, whatever you're making, is to first understand your margins in your business very carefully, and then be able to say this cost of credit doesn't match with my net margin. And I think they have an intuitive sense. I suspect most kirana walas would be IIT ready. If I look at their mathematics processing that they can do, arithmetic processing they can do, they're all very sharp guys. But somewhere they get lost in this marketing spills and end up taking credit that they can't afford to repay. And I think that's the key thing I would say we have to really guard against, because otherwise, the whole party will end. We are today in a party where, every day morning you can take out the newspapers and all you will read is about credit, BNPL, OPL, credit. That party will stop the moment people don't repay. People will not repay if they can't repay, right?
Let me flip this, Ram. You talk to a guy who's in credit, works for a bank or works for an NBFC, and he'll tell you, I don't do bottom up pyramid, because I shouldn't be calling them bottom up pyramid, but you know what I mean. Because
deep tier financing.
Deep tier, okay, sorry. Use the right. But it's expensive for me. I have to print out forms, I have to dedicate resources who are not cheap for me. And when I look at the overall thing, I'm better off just taking up, maybe 100 crore per year manufacturer or whatever, crankshafts or something, or ball bearings, and I'm more comfortable there. Why should I go? So from a bank's perspective, what's your point of view? What would you tell them?
So I would tell him the same thing what his retail colleagues have figured out, right? There are lots of Anupams in this world. So I give a credit card of 1 lakh to Anupam, I will not make much money on it. But the fact is that there are millions of Anupam. If I look at it as a portfolio, I'm going to make a lot of money on it. Now, the job is really from Vayana kind of guys is to really figure out how do I give them the numbers, right? If I do one kirana wala, your friend is not going to be very happy doing it, who is sitting in the NBFC or a bank. If I give him 10,000 kirana walas, then he is fine, because 1 lakh into 10,000 adds up to 100 crores. That's the equivalent of that. Then he's going to say, how much work do I have to do? Because if I have to go and do a lot of work to get this business, then I'm not interested, because then it doesn't work for me. So our job as Vayana is to make sure that cost is very, very low. Then it's a compliance issue. Then it's an audit issue. There's a risk issue also. What we are really trying to do is saying, okay, let's add up all your costs, take one hammer to it, and start figuring out how to reduce each of those costs so that it makes it actually logical for you to do this business. So आपको 10,000 किराना वाला चाहिए, ठीक है, 10,000 करते हैं. You want to kind of make it all digital, we'll make it all digital. If you want to make it all, in such a way that you don't have to get into servicing, we'll take care of that. So every piece of your cost, let's kind of cut it down and then give you the yield that you typically give by giving the 100 crore to the crankshaft or ball bearing guy, and make it out of kirana walas. Why are you concerned whether it is one kirana wala or 1,000? In fact, it's very good for a risk if the loan is spread across many people, right? As opposed to one guy. So in effect, that's all we are doing. Our job is to make sure that the economics of this for a lender, for a bank or an NBFC fits into their, criteria. Typical banker, that's why he never did supply chain financing, because for him इसमें बहुत काम है यार, चक्की पीसने का काम है ये. तो after some time he will say, boss, इसमें I would rather, like you said, do large numbers and फटाफट I sign an agreement, everything is done. This is a transactional business. I have to keep on making sure every 5 days, 15 days, people are using the credit. And that's where Vayana kind of guys become very useful.
So who are the guys who would do this? Because banks, like you said, wouldn't do it. NBFCs probably would dip their feet into it, but even they would. So what, does the government have a trade finance wing especially for this, or how does this work normally?
No, we get the banks in. So we work with the banks. And in fact, we have large banks who work with us to access this kind of pools of debt and finance it. And that's the only way you can reduce the cost, right? I mean, so what we have done is to make the proposition beneficial to them. We have made the proposition viable for them by saying that whatever the issues you had with doing this business, we have removed those issues away. And we have made it easier for you to get into the business. We have made it easier for you to operate this business. We have made it easier for you to show that you have yield on this business, similar to you going to a Maruti and giving him a 1,000 crore loan or 100 crore loan. We can give you some kind of yields. World over, supply chain financing offers one of the best risk-adjusted returns for banks.
Wow, I didn't know that.
Yeah,
seriously.
Yeah, because look, what are you taking credit for? What do you use? I call it a dal chawal business. What are you taking credit for? The kirana wala is taking credit for buying HUL's products or a PNG's products, which he needs, because that's how his business will run. He needs it every day. Correct? So therefore, that business is not going to go away. Right? COVID came, which is a sector that remained. Everything that was dal chawal remained. You could live without some, avocado ice cream maybe, but you couldn't live without dal chawal, right? Or biryani or whatever it is.
Sourdough bread, I think. But
that is sourdough bread. So I think the key is that. The key is that. So that's why the risk is so low, because nobody really defaults. Because they don't want to default on it. If you give them affordable credit, they will not default. You can give them high price credit. I don't have money. I can't, even if I wanted to, I can't repay this. I'm going to default. Moment you make it affordable for him, he's going to say, boss, it's cheap, tikau hai, this is very easy to take, and I need it for my business. Why will I not prioritize and repay this first before I pay off anybody else? I want to pay this. And that's why world over, if you look at it, supply chain financing offers you the best risk-adjusted credit. If you go directly to a small business and give him a loan, that's actually riskier than financing his trade.
Very interesting. And, I mean, it's not to make fun of the sourdough bread and the avocado guys, and Ram, you would know this, right? Because in the pandemic, what's happened is that a lot of educated people, for whatever reason, some people were unfortunate enough to lose their jobs and therefore went into making their own thing and selling it online. We see a lot of ads of all these people who've reached out to the communities. They're not going to get funded by VCs. Okay. Tomorrow, if a sourdough bread baker starts his or her own business online, he or she also needs to buy that material, and for all we know, might actually be looking for someone like you to help him or her out. Do you think that's happened in the last couple of years?
I think quite a lot. I mean, quite a lot, because obviously credit was not available, and if it was available, it was very costly. And first of all, nobody wanted to give credit. I think, in the first few months of pandemic, which subsisted on till the end of the pandemic, I think, and then we have had all these Greek alphabets threatening every day some new variation of the pandemic. I think we are seeing that while credit has become easier and easier for people who anyway would have got credit, it has not become easy for people who really need the credit.
Oh boy, what a fantastic point. I mean, you would get SMSs. I get SMSs almost every day. Your loan has been approved. I'm like, dude, I don't need that loan, for God's sake. Someone who actually needs it is not getting it.
Correct. And so that's a big issue. And second is that even if you were to get credit, what is he getting credit for? I mean, it's very costly credit. So which anyway, poor fellow is already at the wit's end to how to make his business survive. And then you tell him, no, I'm going to charge you 3% a month. He's not, what is he going to do? Right. So ultimately, I think we have seen an explosion of those requirements. And we keep on believing, look, this, just to give you an example of the guy who is unemployed and started a bakery in his house. Now, where is he buying stuff from? He's buying stuff from a larger player. He's not buying bakery products only from, very small guys, smaller than him. He's actually buying sugar. He's buying, dough. He's buying flour. He's buying a bunch of things, all from larger guys. Use that relationship and give him credit, because we know that he, is going to regularly buy it. You have to support him that way. There's no other way of supporting him. And I think that's really one of the things that we have to understand is that, and you made a very interesting, good point, that they are large labor employment generators, right? A kirana wala employs 3 to 4 people. Startups don't employ so much, for the same amount of business. So, while we all, Vayana kind of startups are all nowadays very much in news, and, we are not employment generators the same way. Of course, Swiggy, Zomato, I would give them a lot of credit. They do employ a lot of people. But, lot of startups are focused on not having too many people. A lot of your small businesses have a lot of employment generation capability, and that I think is a crying need for this country. So you really need to allow them to kind of do business. What does doing business mean? As I said, you buy, you make, you sell. Please provide them money for that. The purpose of the credit, provide them credit. And I think that's where somebody's asked me, budget ke liye kya chahiye? I said, tum buy and sell, usko yaar simple karo yaar. Just make sure that he can buy and sell. And the cost of financing of that is very low. That's all he needs. Then he will figure out how to kind of do it. One of the things why Indians go abroad and become very successful is that the friction that they have to endure for doing anything is so low. We have to reduce that same friction. The same Indians here also will do exceptionally well. It is not that, we have suddenly become some different being when we go to a US or Europe, right? We are the same people. We just have to make sure the friction is low. We have to keep that friction low, very low.
I mentioned that point about the kirana wala employing labor and therefore a large amount of labor being, because we know the statistics, 80% of India's labor is informal. And on this podcast, on Paisa Vaisa, every once in a while we try and actually look at this topic of informal labor, right? We've spoken with LaborNet, we've done pensions pensions for informal labor with Pinbox, and I hope that people who are listening to this also find it useful. You can't have development if 80% of your workforce. It's a gigantic workforce. It's probably my guess is it's probably the population of US. You're talking about 35-40 crores. It's probably that large. They need opportunity. So I get what you are saying. So let's make it easier, Ram. How can our listeners reach out to you? Maybe there's someone out there who's listening to this and finds this interesting. How can they learn more about Vayana?
So I think one, of course, please visit our website. Please write out to us on the website. There are people that you can reach out to. There are our contact details. We have an address, unlike a lot of the tech companies. So, if you want to write to us, you want to snail mail us, you want to email us, you want to call us, all of those details are there. And we want to hear the story. If you do want to hear the story and we want to figure out how we can help you. If we can't help you, we will figure out who else can help you. Because I think, as I said, ultimately, if we are financing trade, our very, very selfish interest is to make sure trade volumes are going up. So if today we can't finance you, we still want to keep an eye on you to make sure that tomorrow you are ready for taking that financing, right? So ultimately, that's what we are into. And I think that please reach out to us, very possible way that you can. And all our information is there on the website. Yeah.
So folks, all the credentials, the website, the social media handles, everything of Vayana is on the episode description. Just look down. Look at your mobile or your laptop screen and you'll find everything out there. I'll just spell it out for you. Vayana. Okay, Ram, so I want to just sneak in this bit of unrelated question to this entire thing, just because I've heard a lot about this product, and probably maybe someday I'll have someone from this field on our podcast. But you would know, you would have heard of a lot of, call them platforms, call them tech companies, whoever, who actually arrange for people like you and me, retail investors, to finance trade finance. Could be in the form of invoice bill discounting or whatever it is. And they offer pretty good rates of interest. I don't know. I have never personally invested my money in this. I don't understand it. You have any idea about what this is about, or any point of view in general?
So I think, as I said, supply chain finance is the most well risk-adjusted return it gives you. So, and the fact is that you require it daily. So therefore, it makes very logical sense that if you make it an asset class and say that there is a 45-day loan you want to give and you can earn 12% annualized on it, there will be a lot of people like you and me who otherwise would have put our money in fixed deposits or mutual funds will find it very attractive to kind of put the money in. So the basic thesis of it is very simple. All of us have some pool of capital that we want to get a very good returns on. And this is an asset class that generally has been very safe. And therefore, when we put money into it, we should get a good return on it. I think that's a basic premise. And I think it's a great premise. First and foremost, it's typically called marketplaces and, debt marketplaces or, trade assets marketplaces, but that's what they do. I think the problem really, if you look at it from a business point of view, a small business guy, and I have this favorite example I give, and I will give this example. So Anupam, you walk into a restaurant and you want to pay by credit card. And not today, it's very simple. You just pay by credit card. You don't even think about it. But let's say that I make it a little interesting for you. I tell you, Anupam, before you give the credit card, by the way, has no bank name on it. It's just a credit card with 16 digits on it and all the other information. You have to now go to an app. put this information that you want to pay 250 rupees in the restaurant, and bunch of people are going to now climb in and say, it's a bunch of banks saying that Anupam, mere se le lo, mere se le lo, mere se le lo, and this is a cashback, this is a cashback. You actually can figure out which is the best cashback giving bank and then choose that option. Great idea, right? I mean, to say that, look, I'll actually be able to maximize the cashback I'm getting on every transaction, and I can choose at the point of time when I'm making the sale, or the payment. Imagine doing this 3, 4, 5 times a day. By the third time of the day, you will go to the ATM, take out money, and give cash to that fellow. You will say, Bhaiya, I can't do this. I can do this once in a while. And that's my only problem with these marketplaces. The amount of time and energy you require to something that you do regularly many times a day is just too much, right? So I'm an industrial engineering guy by practice, and we do a lot of operations research. Too much optimization is also bad for life. You don't want to, every transaction, if you want to find the best deal, then that's your job. Then you should not be doing a business, right? I mean, now, so I think that's the only thing I have against this, but I think as a thesis, yes, I think it's good.
The two of us are old school. We believe in keeping things simple. I want a good rate of return, but I also want safety and accessibility. I get what you're saying, Ram. Thank you for your perspective on that. So, folks, that's it. That is a wrap on this episode of Paisa Vaisa. My guest, Ram Iyer, founder and CEO at Vayana Networks. Ram, thank you. Thank you so much for doing this for our listeners.
Hey, thanks a lot, Anupam, for having me on the show. As I said, great. And I like those questions. Yeah, keep it coming.
Thank you. Thank you so much, Ram. Folks, you know how to reach out to Ram. And listeners, if you like this podcast, don't forget to check out other interesting podcasts on the IVM network. You can listen to us on the IVM Podcast app or ivmpodcast.com. You can also follow us on our social media. We are IVM Podcasts on Twitter and Instagram. And if you want to reach out to me, I'm your host, Anupam Gupta, B50 on Twitter. And thank you so much for listening to Paisa Vaisa.
No material on the show should be considered as financial advice. The material on the show is for informational purposes only. Please consult a financial advisor before taking any investment decision.
Hey everybody, it's been another great week on the IVM Podcast Network. On Cyrus Says, the cast and crew of Gairaiya joins Cyrus in a fun chat about the making of the film. Cyrus talks to Deepika Padukone, Ananya Pandey, Siddhant Chaturvedi, Darya Karwa and the director Shakun Batra. Kadai Podcast is back with a new story. Venvel Seni is a Tamil podcast done by Kavita Jiva. Find out how Tamil South India stayed independent of Ashoka and the Mauryan Empire. On Paisa Vaisa, Anupam discusses finance for informal labor with Gautam Bharadwaj and Parul Shet Khanna, co-founders and directors at Pinbox Solutions. Should assisted dying and euthanasia be legalized? On All Things Policy, the Takshashila folk analyze the Lancet Commission's Value of Death report. And on the Filter Coffee podcast with Karthik Nagarajan, freelance journalist Priyanka Pula sheds light on the drug regulation problems in India. Do follow us on social media. We're IVM Podcast on Twitter, Facebook, Instagram, and LinkedIn. And remember, if you're enjoying this show or any of our other shows for that matter, please do tell a friend. The word of mouth really helps. Also, don't forget to rate us on whatever platform you're listening to us and check us out on YouTube. You can check a list of all our channels at ivmpodcast.com/YouTube. And finally, we'd like to thank our sponsors this week, Bank of Baroda and HDFC Life Insurance. Thank you so much for making this possible.
IVM